Hi everybody, I'm Janine. I'm here with Dave from Attract Capital, and today we're going to be talking about the explosion in lending options for mid-market companies. So Dave, I know you're going to dive into this. Can you tell us a little bit more about what this looks like and if it's a good time for mid-market companies to be borrowing loans?
Sure, Janine. It's great to be here, and it is a terrific time in the market for if you're looking to borrow a loan. There is a veritable explosion in options, and we're going to talk about the major reason for that, which happens to be the growth in these direct lenders. And these direct lenders have just become this mammoth force in the market over the past 5 years. But it's a great time, and there's a lot of new capital that's come online, which means that all the other lenders are having to compete even harder to put money out. And we've got a really strong economy. So there's probably no better time. I'd say we're in like the golden age for mid-market companies. If you're looking for a loan, there's probably no better time to go out and find it right now.
That's great to hear. So what's going on right now in the lending market for mid-market companies?
Well, I think the key theme that I see is the rise of the non-banks. So traditionally you've had banks and they've been dominant, but over the last 9 years you've had the growth in this sector called non-banks, and they're also known as direct lenders. And over the last 5 years, this group of lenders, and there tend to be either private equity firms or credit funds or independent funds, they've gone from about 63 billion of assets under management to 181 billion under management.
Oh, wow.
So they've like tripled in the last 5 years. And they've become a real force. And what they've done is they've forced the banks to become stronger and more competitive for the lending business of mid-market companies. And they're really pushing into the mid-market, and they're doing smaller and smaller deals. So we've seen some of these direct lenders, these non-bank direct lenders, look at deals as small as 6 million, 7 million. So they're a force to reckon with. They brought a lot of additional capital into the market. And they're raising a lot of money. Like in 2017, they raised $35 billion.
Okay.
In 2018, it looks like they're going to raise even more than that. So it's just a tremendous force, and it's really changing the structural landscape of mid-market lending.
So there's a lot of growth happening right now.
Tremendous amount of growth.
And what do you think is causing them to raise that much money? Where is this all coming from?
That's a great question, Janine. Where is all the money coming from? It's coming from the fact that a lot of institutional investors, a lot of pensions, a lot of asset management firms, endowments, they like the returns that you can get from making loans to the middle market. And because if you look historically at the returns that these loans have paid, it's been very stable and it's been high. It's on average about 9%. So they tend to like the return profile, and in a world where you have a lot of fixed income debt securities, these are floating rate securities, which is a very positive. So there's a big push in the market with a lot of the money in the market that's going to these funds. So that's why they're raising money hand over fist.
Oh, wow. So if I'm with a mid-market company, why would I want a loan from them?
So the direct lenders, they make loans like everybody else, but one of their hallmarks is that they can do a tougher deal. So if you don't have as much collateral, or if you have a bit of a story to your company as to maybe you had a bad year, but you're still a great company, it's easier to convey that to a direct lender, a non-bank direct lender, than it is to convey that to a bank. So they're more flexible. And if you get into the middle of the loan, let's say you're 2 years in, let's say you have a tough year, you're not making much money, you're not doing the numbers that you thought you were going to do, usually the non-bank direct lender is more understanding, they're more flexible to work with. So you can do a tougher deal with them, you can get money from them that you can't get from a bank, and they're more flexible. So those things are very important to mid-market companies. They want to know that the person they're working with is flexible and will be a good partner over the long term.
That makes sense. So what are the different types of lenders available to the mid-market companies? So
I'd say if we look at probably the biggest form of lenders to mid-market companies are banks, okay? And so just to touch on banks for a second, banks are growing their loan portfolios. They're not growing as fast as the direct lenders, but they're growing. And banks are still good to go and try to get a loan from, but they've become restrictive. And so they don't accept as many loans, they don't accept as many borrowers as they once used to. But with banks, Banks are having to work harder now because of the competition of the direct lenders. So they will give you more availability, they will give you less onerous covenants. And what we find from the recent deals that we've closed, the smaller regional community banks are better to deal with for the simple reason that they're more lightly regulated. So the big banks are very heavily regulated and the smaller community banks are less regulated.
So it's good to know you can still go to banks, that they're still available there for the companies to go and get money from.
They are, but the big banks are very difficult to deal with because you can go to somebody in one region who's going to take you to somebody in another region who's going to take you to a decision maker in a third region, and they're very discoordinated.
A lot of crisscrossing.
Exactly. It's hard to know who the person behind the curtain is at a big bank, and at a smaller bank, you can meet the decision maker in the first meeting. So it's more of a person-to-person connection, and it's more and people like that.
Absolutely. And how about mezzanine funds?
Mezzanine funds. Mezzanine funds.
Tell us about those. Janine wants to know about mezzanines.
It sounds more
I thought it was going to rhyme.
Janine and mezzanine. It sounds, just the word mezzanine sounds more exciting and interesting than it really is.
Fancy.
Mezzanine funds have been around for a really long time. They've been around for 25, 30 years. They're still out there. They're still doing loans. They are having to compete more because of the banks being more aggressive and because of the direct lenders being more aggressive. They are still they can be very flexible. They can give you a very bespoke structure. And they are still probably the best game in town when it comes to roll-up situations. So if you're a mid-market company and you need money for multiple acquisitions over like a 2 or 3 year period, a mezzanine lender is a great bet. They can supplement a bank, they can give you more money than a bank, but they're good, they're a good, strong option, and their pricing has even come down a little bit because with all this new money that's in the market, everybody's had to sharpen their pencil in order to remain competitive. So that's it. The direct lenders really by themselves have made the entire market more borrower friendly and made it more of a buyer's market for loans.
Okay, and then so what does the future of direct lenders look like to you?
I think they're going to continue to gain. I'm going to look into the crystal ball here, Janine. I think the direct lenders are going to continue to do really well. I think they may not raise as much money over the next couple of years as they have over the past few years, but they're going to continue to take market share from the banks.
Okay.
And I think their pricing is going to get more competitive. I think the banks are going to have to get more like the direct lenders, and the direct lenders are probably going to become more like banks. There'll be somewhat of a convergence there.
Okay, so for me, if I had a deal, what would be the best lender for me? Would you go with a bank, direct lender, mezzanine funds? Help me out here.
Okay. Well, your name rhymes with mezzanine, so
Almost.
Okay, almost. But it really depends, Janine, on what you want to do. Okay. It really depends on how much money you need. And the simple answer is mid-market companies should go to all three of those types of lenders. We call them channels. So you have a bank channel, you have a mezzanine channel, and you have a direct lender channel. And you can get different things from each of those forms of lender, and you kind of have to look for the best combination of those different things. And so you really can't afford not to go to all three of them. So you have to go across all three channels.
I see what you're saying here. So you kind of have to go across and then source through all of them?
You have to go across and you have to source through all of them.
So we're like surfing through all three.
Exactly.
So I feel like maybe Attract Capital maybe does something like this. That you could, help out with this.
How did you know that, Janine? That's
just a while.
So whenever we get a client, what we always do before we even onboard them is we talk to people in each of those three different channels. We'll talk to people at a bank, talk to people at the mezzanine, talk to people at direct lenders to see how they view the lending opportunity that we're bringing to them. And we have a special word for it, we call it cross-channel sourcing. Cross-channel sourcing, okay? Again, it sounds a lot more exciting than it really is, but what we do is we try to reach into all three of those channels because sometimes a bank will really like a company that you don't think they'll like because they've had a positive experience with it and they'll give you a really good deal. Sometimes the mezzanine lender, same thing. Sometimes the mezzanine lender won't like it for a very strange reason and so on and so forth. So it's hard to know the specific reasons why each of these channels will like or won't like a deal. So you kind of have to go to all three of them to make sure that you get enough term sheets so you get a good result.
That's incredible. It sounds like if you out there watching have a deal and you're looking for some assistance with it, Dave Barnett here can help you through Attract Capital. And if that's everything, then I think we've covered today.
I think we've covered everything. So there is an explosion going on. You can participate in it. Give us a call, and we're happy to take you through more information on the subject. Take care, everybody.
Bye.